Disney continues to defy gravity by raising prices and cutting content without losing subscribers. Meanwhile, YouTube ads soared above 10 billion with help from long-form content. Listen on.
And welcome to this week's edition of Inside the Stream. This is Will Richmond from Video News, and that was Colin Dixon from In-Screen Media there at the beginning. Hi, Colin. How is everything going for you?
It's going great. I'm getting geared up for the Super Bowl. That's always a big day for me because I'm checking the quality of the streams and the latency and the performance, etc. But it's a pretty big game for the Kansas City Chiefs. They're looking to go 3-0 on the Super Bowls. That will be a first. But I don't know. I think I'm going to be cheering for Philadelphia. What about you?
Yeah, I mean, I like both teams, actually. I don't have a horse in this race, as they say. So I'm just looking forward to a really good game, and I'm looking forward to seeing some fun ads. It's always a great time to see what the advertising creatives have come up with for the Super Bowl. So
it will be, yeah. And you know, I think a lot of us are going to be also doing the Taylor Swift and Donald Trump cams, because I think they're both going to be in the arena. So I'm going to be counting up and see who wins on camera shots, if it's Trump or if it's Swift.
Right. And by the way, in America, we call them stadiums, not arenas, but regardless.
Yeah, okay, whatever.
We know exactly what you're talking about, Colin. So speaking of the Super Bowl, you have a little bit of news, a couple of news items this week. We're going to start with you on Super Bowl.
I do, and one of the things I usually track after the Super Bowl is done is I count up the number of people that streamed the event. And the reason it's not necessarily what is provided by the company that's hosting it, which is Fox this year, is because they rarely include the streaming platforms, the virtual MVPDs, things like YouTube TV and Fubo TV, etc. Well, there was a poll of people that came back with 56% of total Super Bowl viewers, that's approximately 67 million people, are expected to stream the event this year, according to new data from a company called Vegas Slots Online. Now, I can't speak to the authority of their data. They said they spoke to 1,000 respondents. You know, these things are very, very variable, and if they did that all through the phone, who knows who they ended up talking to. But, you know, they're saying that 64% of adult Gen Z and millennials are planning, that's the 18 to 34-year-olds, are going to opt for streaming, and just 19% of those 65 and older will stream the game. So, I don't know, how will you be watching it? Will you be watching it on traditional or streaming?
Yeah, just traditional for me. I will probably jump into the Tubi stream just to see how it goes, how it looks. But, yeah, I'm just planning to watch it on Fox. You?
No, I'll be entirely streamed. I don't have a traditional pay TV subscription at all. I do have Sling TV, and I'll probably have Sling running on one of my many screens. But I plan to watch it mainly on Tubi. And as we talked about last week, I remain a little bit nervous. And this 57% number only makes me more nervous that Tubi can deliver. I know that during Fox's earnings call earlier this week, Lachlan Murdoch, who is the CEO of Fox, is looking to it to be a big day for Tubi. He's trying to attract a lot more users to the platform with the event this year. And so he's totally pumped about its opportunity to drive Tubi subscribers. As he rightly says, there's a ton of stuff on there, so when people are done watching the Super Bowl, maybe they'll flip over and start streaming some other stuff on Tubi. But that only happens if Tubi really delivers, and they've really grasped the nettle with their promise to deliver it in Ultra HD. But we'll see. We'll see how they do. Be interesting to talk about that maybe on next week's podcast.
Yeah, and I'm guessing to your point about them trying to get more people to use the Tubi app after the Super Bowl, given the array of content that they have, I'm guessing that we'll probably see some ads for, or if not a full-blown ad, at least some short promotions for Tubi during the Super Bowl that'll help get the word out on what else Tubi has to offer.
Yeah, I'm sure we will. That's definitely something I think that will happen. But what did you see? I think, didn't we hear from Google this week about YouTube?
Yeah, so some pretty significant news there on the YouTube front. In Q4 of 2004, Alphabet, Google reported that ad sales for YouTube hit about $10.5 billion. That would be up about 14% in the year over year from the fourth quarter of 2003. And that is also the first time that YouTube would have been over the $10 billion mark in a quarter for ad revenue. So YouTube continues to perform really strongly. I think maybe last quarter, the prior quarter, they said that the trailing 12 months was annualized revenue of $50 billion. So that would mean that it's up even further in the most recent trailing 12 months. But, I guess to some extent, no surprise that YouTube had this strong quarter because of the political season that we just went through in the fourth quarter. I think it was either a record or close to a record amount of political ad spending in the quarter. And so YouTube is obviously going to get its share of that. I think I recall Nielsen saying back in December that YouTube now has the greatest share of viewing on connected TVs, about 11% overall. So YouTube performs strongly on TV, and that's where a lot of political ad spending goes. So no surprise that YouTube would get a bump there. They also pointed to how AI is continuing to enhance the business. They didn't say exactly, I don't think they said exactly, any sense of what the contribution was of AI, but I think they are bullish on AI's continued impact on the ad business. And that, of course, is something we're going to explore in a couple of weeks. You're going to be moderating a session at Video News' next virtual CTV event, which is focusing on the intersection of CTV and AI. And so no doubt we will be getting into that topic as well. So how about you? Any take on the YouTube quarter?
Yeah, it's a pretty interesting data, and I can tell you that that Fox backs up YouTube and Google's assertion that it benefited from political advertising, because that was one of the things certainly Murdoch called out as being a driver for Tubi. Tubi actually increased advertising 30% year over year, advertising revenue 30% year over year, according to him. And part of that was due to advertising, although due to political advertising, although he did say that Tubi enjoyed a pretty decent growth in advertising, even taking out the political component. So that certainly does seem to back up there. But, one of the things that I think is helping to drive YouTube's acceptance, particularly on CTV, Will, is that it really seems to be the mix of content that people are watching on YouTube is changing. There was a report this week from Digital Eye, that's the word digital and the letter I separately, if you want to go hunt for that, that you'll find that this data, and they said basically that 73% of all YouTube viewing time, this is time now, 73% is now to content that's a half hour or more, which is up 8 percentage points from a year ago. And so that really means that only 27% of viewing time now is devoted to video that is 30 minutes or less in duration. So there's a couple of things to remember with this number. The first is, of course, that you would expect long form to own a much larger proportion of time spent viewing rather than video starts. It probably still takes a much smaller proportion of video starts on YouTube in general. That's owned by short form. But it really, the growth in long form, I think, really sort of lends credence to, a lot of the data we're seeing in the general market that's showing growth of YouTube on TV. I think watching on TV definitely promotes longer form viewing. So that sort of backs that up. But there was something else I caught sight of, Will, that I thought also seemed to back this up. And that is that they're getting help from some of the content providers. I read a report today that Warner Brothers has been quietly moving more of its catalog, its movie catalog, classic movies, onto YouTube for free. And I was checking it out, and there are indeed quite a lot of free movies available on YouTube from Warner Classics, movies like The Wind and the Lion with Sean Connery, Michael Collins with Liam Neeson, Mr. Nice Guy starring Jackie Chan, City Heat, Clint Eastwood and Burt Reynolds, and I could go on. There's quite a lot of titles up there, and I can tell you I will be checking those out. But it's very clear to me that also that YouTube is changing its mix. It's working now with companies like Warner Brothers, not only licensing, but Warner Brothers is just putting this stuff out there for free. I think this really indicates that YouTube is becoming a very, very important platform on CTV. And I think we're going to continue to see those minutes spent with long form and those advertising dollars grow because of this trend.
I think that's right. I agree with you. And I also saw that Warner Brothers news about putting some movies up. Can't remember how many it was. I don't know if it was a huge number, but to your point, there are some decent titles in there. And I thought it, again, was further proof of how premium content providers are experimenting with how to use YouTube. And that's been an undeniable trend, and partly due to just YouTube's massive audience base. I think it's a way for them to get some relatively easy monetization in front of a big audience.
Yeah, and talking of Warner Brothers and YouTube, I noticed it's the 85th anniversary of Tom and Jerry, and I think they've put a bunch of Tom and Jerry stuff up on YouTube as well. So if you're a Tom and Jerry fan, you can binge out this weekend on Tom and Jerry cartoons on YouTube.
Gotta love Tom and Jerry. So anyway, I think that's it on YouTube. And you had some thoughts and perspective on Disney's earnings this week.
Yeah, I did. They reported their Q1 2025. They're on fiscal quarters. So Q1 2025 for them is the same as Q4 2024 on a calendar basis. So they're basically reporting the last full quarter. And for them, actually, I think it's a pretty encouraging report, Will. They actually showed modest growth in Disney Plus subscribers in the US and Canada. They increased by 800,000 in the quarter. And they did lose international subscribers. Now, this is a little bit complicated because, of course, they got rid of Disney Plus Hotstar during this period. So we had to correct numbers for taking Hotstar out of the past data. But correcting for that, it looked like they lost just a little bit. It looks like they lost something like 1.5 million on an international basis, which led to overall losing a little bit, total subscribers. They now have 124.6 subscribers, and they had 125.3 last quarter. But the reason I particularly call out the US and Canada performance is that they actually had a pretty big price increase at the end of 2024. And Bob Iger, who's the CEO of Disney, was crowing about the fact that, well, they really are not seeing any impact from them raising prices yet. This is doubly interesting because, of course, they've cut back on the amount of content that they're putting in Disney Plus, particularly in the US and European markets. They've cut back on that content. So right now, they are managing to defy gravity by pulling content off the service and creating less new content for the service, raising prices, and still not seeing the impact on the subscriber numbers. The subscriber numbers continue to tick up, at least in the US. So I think that's a pretty impressive trick. I'm not sure how long they can maintain it, but maybe I'll just pause there and get your thoughts.
I totally agree. They raised the prices pretty aggressively. We know from others' experiences that always, or I should say mostly, can lead to softness on the subscriber count. You get some churn, you get people who decide it's not worth it any longer. So for Disney to be able to make the price increase and still, do well on the subscriber front, I think is, very significant news for them. And no doubt will, in addition to the content story, as you said. So I would think that would give them some pretty good encouragement about the value of the service and its standing relative to other streaming providers.
Yeah, I think so too. Just to sort of recap on the other numbers, Hulu saw modest growth as well. It often does in the fourth quarter. Fourth calendar quarter, that is, as people stock up on content ready for the holidays. It saw SVOD only subscribers grow from 47.4 million to 49 million, so that's 1.6 million growth there. Live plus SVOD, that's Hulu's virtual MVPD, saw no growth at all, and that's actually not a surprise. That service has not been growing. And actually, one of the things that Mr. Iger addressed a little bit in the call was, and I think we've talked about this in the past, we were trying to unpick why Disney in effect purchased Fubo TV. Because, of course, Fubo was suing Disney and Warner Brothers and Fox over the Venue Sports. But Venue Sports, that lawsuit went away as soon as Disney announced it was purchasing Fubo. And then they decided that Venue Sports was going away as well. And we'll get to the reasons why he says that happened. But the reason I bring this up now in reference to Hulu's virtual MVPD is that it's really not been growing. And Mr. Iger commented on the call that he thought that with Fubo's stewardship, that it would get more investment and more interest in that user experience that could help it start to grow again. He said it's not core to their business, and that they were really looking for somebody like Fubo to bring some leadership there and help it start to grow. Now, this is still a very curious relationship. We're not quite sure how this is going to work out in the long run. For example, Disney still owns the marketing rights, as it were, for Hulu plus live TV. So it's not quite clear how that's going to work out. But what apparently is clear is that the day-to-day management and improvements in that service now is Fubo's responsibility. So maybe later this year we might see some improvements in the user interface and some improvements in the growth in subscribers again, because it has fallen far behind YouTube TV. And really hasn't seen any growth at all in the last year or so. Now, we should also mention ESPN Plus, which is their other D2C service. Actually, ESPN lost subscribers in the quarter, and this is it was a pretty big loss. They went from 25.6 to 24.9, which is down. It's actually now down 2% on the year. It was back in September of 2023. It was 26 million, and it's now down to 24.9. So it's continuing to, I think, struggle a little bit to gain subscribers. But the other thing also is that we did see pretty good, I think, appreciation of average revenue per user for all of Disney's streaming services. They all increased year over year. Disney Plus is now on average $7.55, and ESPN Plus is $6.36, and Hulu SVOD is $12.52. That they're all up year over year. So all of that is to the good. What did that mean for revenue? Well, it meant a pretty good story for revenue, because Disney's D2C revenue in the quarter has increased now 26% year over year to $6.1 billion. And that's up from back in December 2023, it was $5.5 billion, $5.6 billion. So pretty decent increase, and it remains profitable. This is the second quarter that they say their direct-to-consumer services are profitable. $293 million of operating income versus 253 last quarter, and more importantly, a loss of 138 last December, last Q4 in 2023. So generally, I thought pretty good results for Disney overall.
Yeah, I completely agree, Colin. I would say pretty stellar overall, across the board, as you mentioned. And of course, we're waiting for eventually the launch of, I think they're calling it ESPN Flagship, the standalone ESPN streaming service, and we'll see what impact that has in the market. But it's I think they've kind of stabilized the ship on the streaming side. Don't you agree?
They have, and I think there was a couple of things going on that I think are very influential in doing that, Will. They've been incredibly successful with the Disney bundle, and it is priced extremely aggressively. Like I'm on the Disney Duo, which has Disney Plus and Hulu included in both, and I'm on the ad-free tier of both of those. And when I looked, I'd actually simplified things. I actually dropped from the Trio, which I thought got too expensive in the latest price rises. So I actually dropped out of Trio and went to Duo. And it just, I would probably, if there'd been a bigger price difference, I would almost certainly have dropped Disney Plus, because I really don't use it. We really primarily use Hulu. But the difference was only $1. And I thought that it was almost certain that I would want to watch at least one or two things on Disney over the next few months that would make it worthwhile spending that extra $1. So I think that strategy is working really well. And coupled with that strategy, they talked a lot about this in the call, Will. And that is that they're really pursuing a unified user interface strategy. They're really starting to circle the wagons around Disney Plus. They have launched an ESPN Plus tile in Disney Plus, and there's also a Hulu tile inside of Disney Plus. So if you want to, you can use Disney Plus as your single client for all Disney products. They percolate up recommendations and your usage information in the interface from all three if you're subscribed to all three. So when I notice when I go into Disney Plus now that what I've been watching in Hulu is in my watch next line. It's right there, and recommendations from Hulu are included in Disney Plus too. And so this strategy is pretty interesting, right? Because it gives you a single spot to watch all the content, but it also is helpful, I think, in Disney upselling you to higher tiers of bundles, maybe adding back in ESPN Plus, etc. Because when you go into those tiles, you can still see all the content. You just can't watch it. When you try and watch something that's not in your bundle, they prompt you to upgrade to the next tier to get that additional content. So I think that strategy is really beginning to pay off for Disney, and those two things, the unified UI and the focus on bundling, is really helping Disney retain customers.
Yeah, totally hear you. Bundling as a proven strategy, as we know from the pay TV world. And Disney is very much running that playbook. So anyway, good discussion, Colin. Anything else on the Disney front, or any final thoughts?
Yeah, they did talk about Flagship a lot, Will, and it's viewed as a really critical product inside of Disney. They actually reported that ESPN had a very, very, very good quarter from the point of view of viewership, that viewership increased a lot, and that they had a lot of success there with that. So there's that. And Iger also says that when ESPN Plus Flagship, as you said that they refer to it, when Flagship releases later this year, that it will also have a tile inside of Disney Plus, and so if you are subscribed to that, you can continue to watch all of that content through Disney Plus. So there's that, and by the way, they're putting everything and the kitchen sink into Flagship. We're going to see, I think, a lot of the content that you see on the broadcast channel, you're going to see specific content for Flagship. You're also going to see the integration of interactive features, data, and they say they're going to bring betting into the mix. So it could be pretty interesting, and I'm sure both of us will take a look at it when it does actually arrive, and so we'll talk more about it then. So that's one thing. I did want to mention one other thing about venue and the impact of venue. Disney was asked very specifically about venue and what went down there, why Disney so dramatically decided to withdraw the product, obviously working with the other two partners in that venture, Warner Brothers Discovery and Fubo, and Fox. And the response from Bob Iger was that, well, what we saw pay TV operators are beginning to provide more smaller, more focused bundles of content around sport that really mean that the necessity of providing a venue was going away, that it was basically being taken on by the pay TV providers. But I got a feeling that Mr. Iger has the sequence of events a little confused here, Will, because very definitely in my mind, the sequence was that they announced that they were going to do venue and what was going to be in it. And Fubo and pay TV operators all pitched a fit because they had not been allowed to do that. And basically, when Disney went back and negotiated with folks like Charter and Comcast, etc., when they went back to negotiate for new carriage arrangements for their channels, basically the operators said, okay, gloves are off. You give us this ability to create a competitive bundle with venue or no deal. And I think Disney and other providers are now giving the pay TV operators the ability to aggressively bundle this stuff. That's the sequence of how things went down, not the way Mr. Iger implied it, was that he was putting the cart, I think, before the horse.
Very well may be, Colin. The whole venue saga is going to be, no doubt, scrutinized in the future. And to your point, some of the sequencing may yet be investigated and emerge.
But anyway, I think that's just about it for this week, Will.
Yep. Packed a lot in. So, Colin, enjoy the Super Bowl. Everybody listening, enjoy the Super Bowl. We all, no doubt, tied to the big game on Sunday evening.
Very good.
Okay, take care, Colin. Thanks, everyone, for listening in. We'll see you all again next week.
Inside the Stream is a production of In-Screen Media and Video News, all rights reserved.